Hey folks, and welcome to this video. Okay, so just continuing on from where we left off before, we had a bit of theory in the first video, and in the second video we delved a little bit into the concept of, of volume and how it is used, and we're just going to continue the discussion and focus on one symbol and one chart. We're going to talk about the notion of how price is fractal. Okay, and so anyone who's ever heard any of the webinars given by Chris Laurie, he always talks about how price is fractal. And if you consider what a fractal is, it's essentially an image, and even when you zoom in, the image continues, it repeats itself because the patterns, the macro patterns, contain an unlimited number of the same pattern just on a micro scale. And so you can zoom into any detail on the fractal and you're seeing the same thing over and over again. And the same thing applies to price. And so having learned from Chris, when you would be using some of the indicators in MT4 and you apply the fractal indicator, you would be seeing like something like this, where you'd have a high and a low, stuff like this, like swing points. And so I found that a little bit confusing, having studied with Chris. And so this made me a little bit confusing. So I want to go over a little bit of what fractals mean, and we can actually do this to find entries, okay, on multiple time frames. And the beauty of it is, if you've identified a really nice area at which to trade, you can go down to the smaller time frame, and then within your supply or demand, you will find another micro supply and demand that you can use to refine your entry. So reduce your stop size and increase your volume. And so if we just take this as an example, this is the one that's just leaping out at us now. The software found this, thought it was great. So let's just mark that off. And then we're going to go down to a small time frame. We're going to have a look and see what that looks like inside. And we're also going to understand why the wick went to the top of the area. Okay, so we're just going to mark that off. The wick went right there, more or less, a little bit higher. Okay. And this is where price retreated from. And while it looks like price just managed to dig in there, there will be, without a shadow of a doubt, a reason that price stopped there. Okay, because nothing, yes, okay, I was going to say nothing is random in the financial markets. There is a lot that is random, the noise, and this is just the liquidity moving in and out of a marketplace, and the result of this creates static or noise. And this is also visible on the small time frames, but turning points in price are not random. So we're going to look at this. Okay, so we have this area here, price turned around here. So let's go down to first a 15-minute chart and see if we can understand why this happened. And if we look at this, and there's no real clarity here, is there? You can see that we had our 1, 2, 3, 4 distribution candles. This is the departure candle. Focusing on the theory that we normally use, we would have actually put our entry here, because this is the beginning of the sell zone. We formed this area of distribution. So we formed the base, price departed. The deepest pullback into this base was the high of this candle. So this is where we would have moved our entry. So we're going to go down to a smaller time frame once again and have a look. And you can see here we had a micro area of distribution. Price left. This area of distribution poked up to here. This one left. Okay, so now you can see within this area that we saw in the other time frame, we actually have, okay, getting ahead of myself. Let me slow down a little bit. So what we're seeing here is we're seeing price moving down. It's moving sideways. We're pulling back, and then we're releasing. Okay, that's what we're seeing there. So if we go to the smaller time frame, we're seeing the same thing happen, just with more detail. How price comes down. We have a couple of waves. Okay, and so the leg that left, is here. The high of that is here. So this is the beginning of the sell zone. The price went a little bit deeper, didn't it? So let's have a look on the 1-minute chart and really dig into the detail. We've got to let the data load. See if MT4 can do that for us. Now we have to go through the joy of finding it. There it is. Sorry for the confusion, just trying to find the, there it is. So this is the area. Okay, so this is where the high of the pullback is. And now we want to try and identify other pullbacks similar to this. So here, price left, price pulled back, and then we went here. Okay, so let's have a look and see how close that was to where price actually pulled back to. Okay, here it is. Price came up to it, we sat on it a little bit deeper, a little bit deeper, a little bit deeper, and then we saw the release. So we can actually mark off, we want two of these, one here, and then the other one just here at the high. Okay, so this is interesting. What we're seeing here is we're seeing our pancakes. This is the sell zone. Okay, we have pancakes here. Like so. Okay, so what happens now, once price visits an area, the liquidity in that area is gone, or it's less than it was prior to the visit. So what's happening is each time price pokes into the area, the level disappears. Price goes to it again, disappears. Goes again. This time we had a very hungry seller. It went actually 3 levels higher. Okay, and this time price had to go one more, which is maybe half of this pancake, and then it left. Okay, so this is the whole reason I use this pancake metaphor, because it's just so clear when you talk about it that way. Okay, so now we need to go all the way over. We have this pink line. We want to find exactly where's price turn. So going back. Okay, here we are. We found it. So what we can see here, this is the pullback, so the sell zone, the established price left. But notice here we have another one where we had a level that was respected, price pulled back, and then it left. So we could have actually drawn another one here. This is the micro one that pulled into this small continuation pattern. And then we had this one here. And we can't see it on this chart, but you can see that there's a bar and there's a wick. So this pattern is also occurring in here. And so it looks like, unfortunately, we can't analyze that. So that would be quite lovely to be able to do so. But we had, if we look at this pattern here, we had price come up, kind of went up like this, then it left, and then price went sideways. It went up a little bit, and then it left. Okay, and so we had support here. That wasn't very clear. There was support here. There was support here. This candle here was the one that managed to close price below this level. The sell zone for that is here. So what we're saying is the same, is essentially this, where price goes up, it wriggles north, it breaks away, it moves sideways, it pulls back, the slingshot pulls back, and then it leaves. And so this point right here is this point right here, the high of this candle here. Okay, and on the bigger time frames, this was the point, this was a slingshot, and an even bigger time frame, this was a slingshot. Okay, and so you can see this happening all the time on every time frame imaginable, even the tick chart. On one of my calls with Chris, he went down to the 5-tick chart just to illustrate how these patterns occur. And while he calls his terminology is a little bit different than mine, the slingshot is just a really nice way to verbalize this whole concept, and it works very powerful. And you can see it here, how price moves sideways. We go up, we kind of sit on the level, slingshots pull back, and then we leave. We have another one here, how we form a base here, price moves below it, the slingshot is pull back, then we trade below it. Okay, so because of the fallback to this level, price is able to trade below that, and that is simply because from here and up there was enough liquidity or enough interest in selling to draw price lower. And so currently price is looking at this, isn't it? We have highs and highs. And so if you look at that on this time frame, Price, we have to make sure, of course, that price has not already been there. So let's have a look. Yes, it has. I mean, price has already been to the top. So if we look at this one just here, it'll probably look something like that. So let's go to the 1 minute chart and then go back and have a look. Okay, if we look here, see if we can watch this one unfold. Yeah, so we had price come up to this level, it left, it came back, it kind of hugged the area for a while, and then it finally broke away. So where did price have to go back to in order for price to manage to move lower? Well, it had to come up to here. Oops, it had to come up to here. So the high of the highest candle. Okay, so this is the supply. Anything in here is a reaction to it. But what you can see happening here, supply, reactions to it, on this time frame, which is the 1 minute, on the 5-tick chart, for example, you're going to see the same thing happening all in here, and that's why price goes, price rallies, we form a base, we go higher, we go back to this base, we move higher, we come down, we form a base, we depart from the base, from area of value, we create demand, price reference a demand, we move above it, we form another area here. This is supply. Why is it supply? Because price moved below this swing point, price reference this one. Okay, it comes below, it tests the lows, it moves up again to the highs of this supply. Each time we go a little bit deeper and deeper. Here we have a divergence pattern. We have a lower low on an oscillator. Will be doing maybe something like that. Okay. And then price rallies, moves sideways, rallies, moves sideways, and then starts to break down. Okay, price comes down, we sit on top of the area, so we form a new area of value. So people are happy transacting. This is a relatively low volume condition. The volume enters the market. When that happens, this area is removed. We create a new reference point for the future, but notice what's the high of the departure candle? The high of the departure candle is here. Price comes to it, to the pip. We come down a little bit deeper. So now we're up to the sell zone here. We reference the sell zone. We come down, and you can see price keeps going higher and higher and higher. And that brings us. Let me pull up my slide quickly. Okay, and so here we can see the same thing happening, where we have, let's say from here to here, we have 1 hour of trading. Okay, so if we go to the slides here, let's say this is 1 hour of trading. What happens is price moves higher. We find a little bit of selling in a thin market, illiquid market, which means it could be an illiquid asset or it could be out of session, so the market conditions make it illiquid. Small orders will be sufficient enough to move price. Okay, so during an illiquid time of the day, if price manages to go up like this and then move away, it could be a small order to sell here. Price comes down, a little order to buy, a little order to sell, a little order to buy. And notice how price keeps going deeper and deeper and deeper and wider. And it has to do this in order to find liquidity, because liquidity is going to be available above and below price. So lower liquidity where price currently is, greater liquidity above price and below price, because we are advertising a discount and premium prices at which to buy and sell. Okay, you can see the thick side of the market is here, the thinner side here. What does that mean? That means that the order flows via the liquidity below price will be sufficient enough to consume the liquidity above price. Okay, and so price will gradually wriggle north. Okay, and you can see here that the opposite occurred, where we had price going down and up and down and up like so. We went a little bit deeper, and this was enough. We managed to to match a sell order, and this brought price lower. Okay, went lower. We distributed. We went low. We moved below this. So now we have a new reference point. Okay, so before we had, let me draw this. We had kind of this area here. We formed a new one here, a small one. Then we formed a new one here. Then we formed a little one here. We formed a little one here. See, and so you have price trading between these perceived areas of value, and price is constantly changing between them. Okay, and so at one moment, this is value, and this is a big one. I could have boxed off the individual areas, but all of a sudden that's a little bit expensive, so price leaves and it goes down. And a little bit cheap, expensive, we go down. Goes back up. People are happy. We have a big seller, they come in. A big buy, they come in. Or it could just be like a relatively big buy relative to the liquidity available in the market. It comes up, we go down, we go up, we go up, we go down. You know what I mean? It goes up and down. It does this all day long, and that means people are happy trading here. It's a good price for sellers. You know that because price went down. People are happy trading here. Good price for buyers. Why? Because price went up. So if price goes up, that means that where it came from was a good price, was an attractive price to buy. If price is high and it goes down, that means there's an attractive price to sell, and so on and so forth. And this goes on to the T3 to the 6 month or the yearly chart. It happens over and over again. But my fascination with cycles shows this very, very clearly. I mean, you can see here as well that this is a premium price. What happened? Price left. Okay, this was a discount price. What happened? Price went up. We didn't catch this one. The information is a little bit slow, but you could see here that the price kept going north. It's because we were operating at these discount prices. Okay, price managed to move to the other side here, and here, and then price started to sell off and move down. And you can see here on the SS strength histogram. Here we had another one where we had a discount price. Price went higher. Premium price went lower. Okay, so super fascinating, super fascinating. If you're into that kind of thing, this could also put people to sleep, but hopefully none of you. Okay, and so I've been working on incorporating a volume in the software for a very long time, and I had to stop working on it because I had many other things to do. But this volume bit is going to be finished because it's very important, and we've discussed that very, very many times. And if you look at the buy and the sell zone algo and the asset strength reversion algo, they have session information built into them as well, and so they're paying attention to this, and they're not paying attention to the tick data that you can see here, but they are paying attention to the time of day. Okay, because I mean, here we have London, and here we have New York, here we have Asia. Okay, so we have Asia here, roughly. Of course, this is not accurate. London and and North America. Okay, and so these are configurable in the algo traders because they want to make sure that we're trading during the most liquid times of the day, if you set it up to do so. Otherwise, it'll trade all through this with no concern about what time of day it is. But of course, it's going to be more beneficial to trade during times of high liquidity, because this is where you're going to experience some very interesting price behaviors that are beneficial for our trading model. Okay, good. Well, I'm going to stop at this video. We'll keep moving through these step by step until this information is very, very clear. Thanks so much for watching.